Hello and welcome to our August edition of GlobalView, hosted by FrontierView, part of FiscoNote. At FrontierView, we work as a trusted partner with over 300 multinationals, supporting senior executives such as VPs of region, CFOs, and strategy leads. Our focus is on powering strategic planning, market monitoring, and international growth. And for that, we have dedicated research practices for North America, Latin America, Europe, Middle East and Africa, Asia Pacific, global economics, and healthcare. We work with clients across the consumer goods, healthcare, B2B, and technology sectors. And because it is planning season, even if a little bit earlier than usual, today's conversation is going to be about the outlook for the global economy in 2024. We've seen a lot of companies actually pull forward their annual planning for next year much earlier than usual, really asking questions about how what next year looks like really influences their strategy for the remainder of 2023 and informing decisions both for the next few months, but also, of course, for 24 as well. So it's a very timely conversation. And I'm joined for that discussion by Antoine Bradley from our Global Economics Research Practice. We have quite a lot of insights to share with you, so we should probably jump right into it. First, the most important question, Antoine, is the global economy going to look better in 2024 than it did this year?
The short answer is yes, but there's definitely a longer answer, which is that it's going to look better, but only marginally. So you can see the growth rates that we expect for 2023 and 2024. So 2.9% growth in 23 and 3.1 in 24. So not a huge difference. But one thing that we do want to stress with the global outlook for next year is that you have to look under the hood, because these are relatively stable, quite positive, if not under historical trend growth figures. But there are some very divergent outlooks. If you look across some of the world's three major economies, so the US, Europe, and China, they're on different growth timelines, and effectively they are peaking and troughing at different times. So, for example, in Europe, 2023 has been quite slow to start with, and we're at or near the trough, and then we expect a recovery late into 23 and early into 2024. In the US, it's a bit of a different story. The US has been more resilient in the first half of 2023, but we continue to expect a slowdown, and that will be into early 2024. And then in China, well, there's a complicated story there. We're in a post-COVID, post-zero COVID recovery. It's flagging a bit. We expect some fiscal stimulus from the Chinese government, but the extent of that is still unclear. So the result of that is that a lot of these, these three major economies growing at on different timelines will effectively be offsetting each other, and that's what yields these relatively stable growth figures. It's a similar story when you look at across industry lines. So the outlook in 2024 is very different depending on the industry that you're in. So, for example, sectors that are very sensitive to interest rates, for example, housing, the commercial real estate sector, manufacturing, consumer durables, we still expect a pretty slow year in terms of growth, a pretty difficult year in terms of growth, especially in the first half of the year. Whereas other, which are less exposed to high interest rates, for example, services, traveling, hospitality, etc., there we will see definitely a stronger growth outlook. And so, again, you have these different dynamics going on along industry lines, which effectively kind of offset each other and give these stable growth figures at the global level, if you will.
Yeah, and I guess part of this is also this year actually has been better than a lot of companies built into their plans from last year. So this year has surprised to the upside. We haven't really seen that rapid slowdown towards recession. For those who remember last year this time, I think the discussion was all about recession. Is there going to be one? What is it going to look like? No recession has materialized. And in fact, actually, we've seen pretty decent performance this year, but that also minimizes the scale of a potential bounce back. So we're looking at much more smooth movements from an overall growth perspective, right?
Yeah, absolutely. Yeah. So if you want to visualize it, we don't expect a V-shaped contraction where you see a coordinated recession, if you will, at the global level, and then a bounce back. We like to think of it as a concept of rolling slowdowns, where different geographies, different industries slow down, accelerate at different times, and again offsetting each other and yielding these relatively stable headline figures. So they can be a bit deceptive, and that's why we do stress that you have to look behind the curtain.
And briefly, Antoine, where are the bright spots in 2024? What markets are going to truly outperform?
Yeah, so we think that broadly we'll see an improved outlook across the board, but actually there are really some strong performers. India is really one that has performed well this year and will perform well next year, thanks to very strong domestic demand, really robust domestic demand. So it's relatively immune to the slower external environment. We're also seeing a lot of investment in infrastructure as it heads into an election year. And the rest of Southeast Asia as well, a lot of countries with very strong domestic demand that's really boosting economic activity and offsetting some of the headwinds that they're facing. We also expect some positive growth, a bit slower, but in the GCC, which is still enjoying the rewards of high commodity prices in the last year or two. So some strong growth there in infrastructure. And then Mexico in the Americas is one that we're looking at as one of the higher performers, thanks to really quite comfortable household finances. We've seen a lot of remittances come from the US to Mexico. That's helping boost consumer spending. And then some longer term trends improving the outlook there, particularly when you think of the nearshoring movement across the world and a lot of investment there in manufacturing, for example. So boosting the outlook for Mexico. We have some underperformers. I mentioned China briefly, and it's one that we're looking at very closely because we expected a very strong year of growth in China this year as it exited its very strict COVID policies. That's showing signs of slowing down, and we think that although the government will provide some fiscal stimulus, it will not have the fiscal capacity to, for that to be a big stimulus like it was in 2008, for example. So there will still be some factors weighing on Chinese growth, especially the real estate sector, low consumer confidence, high youth unemployment. So some concerns there. And then in Europe, countries like in North and Eastern Europe, Germany especially, will suffer from a sluggish global growth outlook, which will weigh on export demand. So they're the ones that we're more concerned about.
Right. So some of this is driven, of course, by slowdowns in interest rates, right? We expect to see the first cuts after we've hit or almost hit the peak of interest rate tightening. Very briefly, how do we expect these to perform next year? Are we going to see rapid cuts, or is it going to be a more gradual process?
So yeah, we do expect cuts pretty much across the board, at least in the central banks, the countries that hiked their interest rates rapidly. So the way we see it in terms of timing is those who started hiking earlier will start cutting earlier. Particularly Latin America. Latin American central banks in Chile, in Brazil especially, have already started cutting their rates and will continue to do so. And then you can see kind of different timelines across different regions. And we think the world's major central banks, so particularly the Fed, the ECB and the Bank of England, these will be later, so maybe in the first half of 2024. But we will see some cuts and then, kind of at a coordinated level, especially in the second half of the year. We expect these to be gradual though, because there's still some risks to inflation. So we think that central banks will be cautious when it comes to interest rate cuts. And we don't think that we will return to the ultra low interest rate levels that we saw in the major economies, definitely not next year. And we don't think in the medium term either.
Yeah, I think in a number of different ways, you can think of 2024 as the first year of the new normal, the post-COVID normal. And it's not the same as the pre-COVID normal in a number of different ways. Geopolitics, credit costs, consumer environment, government budgets, a lot of things are quite structurally different than they were back then. And just to wrap up a little bit, some of the implications that we see from all of this for multinationals. First, we think that there's a lot of the price hikes that companies have been able to get through over the past 18 months to 2 years are going to start to get pushed back. And we're already seeing early signs of price sensitivity, particularly in emerging markets or even in places like Europe. And so pricing strategy is going to have to be a lot more precise, targeted, and focused in 2024 to avoid the risk of significant customer backlash, because we know companies are looking to raise prices again next year. At least that's what they're saying about their budgets. But it's going to be something a little different from the across-the-board large-scale price increases that we saw last year. A lot of that is also tied to profitability. So this year, a lot of companies did pretty serious work around segmenting, pressure testing their customers, weeding out unprofitable customers, really making sure that there's discipline around profitability. And that will definitely continue to inform a lot of decisions around new products, services, pricing, and segmentation for 2024. At the same time, we're seeing opportunities across geographies. Some segments, as Antoine mentioned, are really performing very strongly. So there's still going to be quite focused attention, in particular, to outperforming sectors across markets globally. And we are also seeing that related to supply chain restructuring, which is a big theme we talked about in our previous GlobalView session, where companies are really looking at the structure, investments, and de-risking of their supply chains. And then I would also mention that political risk weighs very heavily on companies going into their planning season this year. Of course, they've always had to deal with it, but now you have the geopolitical risks coming from the war in Ukraine, which will extend into next year. China, Taiwan, US-China tensions remain quite high. And you also have these big shifts in terms of governments trying to have a much more direct influence over industrial policy, manufacturing locations, driving subsidies, driving controls over where you can produce, import, and operate in a much more direct way than we've seen over the past few decades. And so all of that is combining into a lot more complexity from a policy management perspective, and mandates that can be quite contradictory depending on what jurisdiction you're really working with. So it's going to be a way more complex environment from an operating perspective for companies, but with a slight uptick from a demand and growth perspective, which is, I think, good news, and lower inflation, lower credit costs. So at least that's going to be a meaningful improvement over the next year or so. So with that, hopefully we've piqued your interest. We have a much more detailed global webinar coming up in mid-September on the story for the global outlook in 2024. We hope you can join us there. And in the meantime, thank you very much, Antoine, for joining us today. And we'll see you next month for our next edition of GlobalView.